You can start, ma'am.
Good afternoon and a very warm welcome to yet another webinar of Steelmints Engage 2.0, a 5-day webinar series to discuss the changing market dynamics of the steel sector. On behalf of Steelmint, I would like to extend my sincere thanks to Ministry of Steel and Indian Steel Association for supporting the event. Also, I would like to take this opportunity to thank our esteemed sponsors, NMDC, JSW Steel, and Tata Steel. This session is on global ferrous scrap price outlook in the near term. I am Nishtha Mukherjee, your host for the session. I would now like to welcome our esteemed panelists for this session. Mr. Sunjoy Ghosh, Head of Supply Chain, BSRM, Bangladesh, and Mr. Fazal Ahmed, COO and CFO at Amreli Steels, Pakistan. Welcome, Sunjoy sir. Welcome, Fazal sir.
Thank you. Thank you.
Okay, so before I invite our panelists to share their views, a few opening remarks from my end. Please allow me to share my screen. I hope my screen is visible.
Yes.
Yeah, it's visible.
Yeah.
Thank you. So we'll start with basic import and export volumes. We'll focus more on the South Asian countries in this session. So if we talk about the import volumes in 2021 versus 2020, so India's ferrous scrap imports volume fell roughly by 13% on YOY basis to around 3.8 million tons. The reason being, again, the preference towards the domestic substitutes like sponge iron and domestic scrap due to cost effectiveness. Coming on to Pakistan, Pakistan also witnessed a drop in import volumes by 10% to roughly 4.1 million tons in calendar year 21. Talking on the Bangladesh front, so we have seen imports increasing by 5% to roughly 3.95 million tons in CY21. A shift that we have seen in case of Bangladesh bulk scrap imports was a shift towards the UK and EU import volumes over Japan. Now let's have a quick look at the exporters front. This is for the complete seaborne trade that was observed in 2021. So majority of the countries have witnessed an increase in the export volumes. Of course, that was because of the economic revivals post the lockdown restrictions. However, drop was seen in EU and Japan. Japan, as we discussed yesterday also, that lower domestic generation and the tight availability lowered the volumes for exports. Now that's a quick look at the price graphs for the South Asian markets, India, Pakistan, and Bangladesh. We have recently been witnessing a sharp rally in the prices in the last 1 week with a sharp rise of, I think, $70–80 in a week-on-week basis. So that was a small presentation that I had to make. As a gentle reminder, I would request the attendees to put in their questions in the chat box, which would be taken up after the opening remarks by our panelists. Now, I would like to turn to our first panelist, Mr. Sunjoy Ghosh, Head of Supply Chain at BSRM Group of Industries, Bangladesh. He has 18 years of experience in steel supply chain areas, and he holds a degree of Master's in Economics and MBA, majorly in Finance. Over to you, sir, for your opening remarks. Sunjoy, sir, are you able to hear us? I think there is some technical issue at his end. Just give me a moment to check on that. Yeah, Sunjoy, sir, you can proceed with your presentation, sir.
So good afternoon, everybody. This is a small presentation regarding today's topic. Already, Ms. Nishita has shown a few figures regarding the scrap import data of Southeast Asia. So this is almost remain the same, but what I want to focus on, what is the source of the scraps? Because everybody nowadays very much scared of the source of scraps due to amid tension in Russia and Ukraine. So if you look at Pakistan import, mostly source of scraps are UAE, UK, EU, and US. So mostly Dubai scraps and UK scraps. For India point of view, they are also mostly through container route. They are also importing from UAE, USA, and UK. And Bangladesh front, mostly 50% in container and 50% in bulk. Most of the bulks and containers coming from USA, UK, EU, Australia, and Japan. So there is a little bit difference than Pakistan and India for Bangladesh point of view. So if you see the other major scraps, scrap importing countries like Vietnam. Vietnam now importing 6.34 million. Their major main source is Japan, US, and Australia. For Korea, they are importing 4.78 million last year. So their main source is also Japan, USA, and you see that Russia. I have put red marks on my presentation. And if you consider Taiwan, 3.1 million ton, US, Japan, Australia. If you see the today's scenario, all the sources from Japan already Ms. Nishita already told that Japan domestic price is very high. So last 1 year their export volume has dropped down. So if you see the future outlook, I think Japan remain the same position this year also. USA, Australia, that those countries will remain same. But if you see the Russia, Korea supplies a lot of scraps to Russia, so there will be an impact on the Southeast market for this portion. If you see what is the current challenges we are facing. So we are facing increased container freight and unavailability of container worldwide. Oil price has gone up very much significantly due to tension in Russia and Ukraine war. And accumulated and sudden steel demand in Turkey due to ban of steel product from Russia, and supply shortage of alternative raw materials like pig iron, HBI from Russia, Ukraine. And for the buyer's point of view, this is great challenge for us to match the domestic price with the increased price of scraps. And what is the which is main concern at this moment for all the steel mills in Southeast Asia, especially not only Southeast Asia, I think for the whole Asia, what will be the reaction of Chinese mill? Because you see, if you consider last few months, all the Chinese mills, they cut down their production. So and now Russia, due to Russia and Ukraine war, Russia cannot sell to other markets. So what will be the reaction of China to import pig iron, HBI, and iron ore from Russia? If it is they are getting very cheap materials, then what will be their production cost will be less, and it will impact definitely impact all the Asian markets. Not only Asian markets, I think world markets. So this is a big question marks at this moment. Everybody is worried about what China will do. And if you consider short-term future outlook, so this is I think today it is very much difficult to say what will happen in during 2022. But if you consider only Southeast market and for the short-term point of view, I feel, this is my feelings, absolutely my feelings, that since Korea cannot import this 0.6 million ton from Russia that they imported last year, so they will definitely cater those demands from Japanese scraps and from US West Coast. So it will increase and it will impact directly all the bulk buyers, especially who are dependent on US West Coast suppliers and West Coast suppliers and Japan. Especially if you see the last statistics, Vietnam market and Bangladesh bulk market will be in trouble. So if this because 0.6 million ton is not a very small deal in terms of bulk, so this is a big trade for Vietnam and Bangladeshi buyers. And if you see this trade, considering these trades, of course, all the buyers will try to, who are the bulk buyers, they will try to increase their scrap import through container route. This is the alternative route. And also, I could say this, since Turkey now catering their extra demand from the Europe, so UK and EU suppliers will happy to supply raw materials to Turkey because they are giving very good price. So mostly India, Pakistan, and Bangladesh, our container front, if you consider the container front, we shall face a lot of problems. So it is really difficult to cater the same demand from UK and Europe in coming days. And that's why I feel all the Southeast buyers, they will looking for an alternative source for scraps, like maybe South Africa, maybe from Singapore. This is local, small countries where scrap is available. So that is the only solution for the time being, at least. So that's all from my point. So thank you very much for inviting me, Nishita.
Yeah, thank you so much, sir, for sharing that presentation with those import numbers, your short-term outlook, and the challenges that the industry is facing. So now I think I would turn to our second panelist for this session, Mr. Fazal Ahmed. He's a member of the Institute of Cost and Management Accounts of Pakistan since 1994. Mr. Ahmed joined Amreli Steels back in 2008 as Director of Finance. Since 2016, he has been entrusted with dual responsibility of being Chief Operating Officer, Operations, and heading the Finance Department as Chief Financial Officer. Over to you, Fazal, sir.
Thank you, Ms. Nishita Mukherjee. Sanjay Bhai, thank you very much for being here, and good evening, good afternoon to everybody who is there. Yeah, the point is well covered already by Sanjay Bhai, and he explained it pretty well, what the problems that we are facing and how things are going to be. I think if I go back to one of the webinars that Steelmint arranged and where Dr. Shifty was there, he had very well explained that the international scrap market is a very well functioning market. Its supply is quite price elastic, and in periods of volatility, they are met with quick response, which we are facing right now. Both the demand and supply side adjust to the changing market. I have been looking at the numbers, and I'm sorry I could not find time to make a presentation. I'll try next time to give a presentation to be a little more clear. However, I found that in FY19, the standard deviation in the price of scrap was 20, and the standard deviation in FY20 was 19. So these are not large numbers of standard deviation from mean price. When it comes to FY28, just to give you a perspective how market reacts, the standard deviation went to 78, from 20 to 78. Now this is where we can understand how efficient scrap markets are. And in FY20, up to February 22, the standard deviation was actually 16. I'm talking about Pakistan import prices that we import from various countries like Europe, Middle East, North America, Central and South. And so these standard deviation explains us that in FY19-20, the prices were in the range of 2019 standard deviation, and then it went to 78 standard deviation, a large standard deviation. Up to February, it was 16, which means, again, after increasing, the scrap market was stable at a price, it was available. So Pakistan traditionally has been importing, as Sanjay Bhai also pointed out, our imports are 50% from Europe, and around 21%, 22% from Middle East, and 15 to 18%, at times 19%, 20% from America. In America, largely from North America, and UK itself constitutes 50% of the entire Europe. So there's a list of countries below Europe as well, where we purchase from. So yes, there could be a shift because of the movers and shakers of scrap is primarily Turkey. We all look toward them. They're willing to pay even more. So yeah, with the freight adding to our cost, the things are going to be remaining costly for Bangladesh, Pakistan, and India as well. So if you go back to FY20 a little bit, just taking you back to FY20, the post started of COVID-19, price did not change much. They remain stable at $300 to $305 per ton in FY20. And FY21, when it started, it actually went down because of the contraction of economy, and there was uncertainty. So this is how efficient the scrap market are, international scrap markets are. 10% down. Comes November 20, which is FY21, and the prices started to climb up suddenly. This was because of the pent-up demand that was there, and the stimulus packages that were offered by various countries across the globe. And in Pakistan, it was the construction was taken as the largest stimulator, or should I say, the most favored industry of Pakistan was construction. So suddenly there was a demand pull from the market, and the demand increased. And of course, the recovery in FY21 as compared to FY20 was V-shaped in Pakistan. And that's why the demand side was very bullish, and a lot of demand came, and the prices started to climb up, and it increased by 55% in FY21. So when we entered FY22, with a jump of USD 35 from June to July, FY22, the first month of the financial year, the prices increased by $35. But after that, it stabilized. And I worked out the standard deviation came to 14, which is the lowest in last 3-4 years, which means after the new norm of price of like $450, $500 it started to stabilize, and the pandemic was still there with the variant, and there were still, difficulties in collection. There are two parts, right? One is generation of the scrap, and the other is collection of it. So the generation was slow in pandemic. People were conserving, not buying white goods, and the spending habit, the consumer confidence, everything was down. So the factories were not spending. All those things came into play. But FY21 pent-up demand came in, and then the collection started to happen. So I think in FY22, after 2nd March, the Russia and Ukraine conflict, things went topsy-turvy, and the prices have skyrocketed, $125 for me. And it doesn't stop here, because 125 means that I have to pay my duties and taxes and landing charges adds up to about 10%. So the increase of $100 is not $100 for me, it's $110. And so that's the kind of situation is as far as prices are concerned and the supply side and demand side is concerned. As far as on the logistics side, if I look at, there are freight cost problems, there are port congestions, there's container shortages, increasing the prices more. There are carriers which are less in number, giving them the power to increase the prices further. And China is obviously the key factor. 3 years back in a steelmate conference, somebody asked me, how do you look at China? I said, I don't look at all at China, because if I look at China, I won't be able to work. So it's a huge market, it's a priority market. So we in our own domain work, and we have been working quite successfully so far. In the short-term outlook, I would imagine the prices to remain more or less at the same level, if not increase further. We do not know the Ukraine and Russia crisis is going to end in 3 days or 3 weeks or 3 months. As very rightly pointed out in another seminar, that the sanctions are there already. It will take time, things to settle down. So there's a supply side shortage. And the demand in our country is very strong. And these are unfortunately the peak months of demand. March, April, May, June, July are the peak months in Pakistan for the consumption of cement and steel, because the weather allows us to build more. We have orders in hand from dams. I don't know how they will react to the increasing prices. And there are so many societies and so many construction work already gone in because of the stimulus package that was announced in FY21, and no project gets completed in 1 year. It takes 2 to 3 years to complete. So there is a definite demand, which we see in our books, which we see in an order. But we foresee that there will be prices will be, because of the shortage of scrap, the prices are probably going to stay here or go up. So there's a double challenge that we are facing right now, whether to buy, whether to stop for some time. So generally in Pakistan, people are staying away. But how long they can stay away is a question. 15 days, 20 days, then they'll have to come back to the market. For companies like us, Amreli Steel, and other large players, Mobile Steel, other large players, they will have to buy. They cannot just stop suddenly and go out of market and come back. They're a listed company. We have debts on our books that have to be serviced. So we don't want to give space, and we will continue to. However, we'll definitely tweak our targets for the year that we had initially set at the beginning of the year. So this is the kind of scenario that we have, and this is the scenario we are working in. Yeah, over to you, Nishta.
Thank you so much, sir, for your opening remarks and your detailed analysis over the trends in the last few years. So I'm sure that was really helpful for our audience as well. Now I think we'll take up the questions. A few questions already that I wanted to ask related to Pakistan and Bangladesh markets to you. So I think the first question would be, what is your outlook on the scrap import volumes for calendar year 22 with respect to Bangladesh for Sunjoy sir, and with respect to Pakistan for Fazil sir? Do you think that the volumes will increase, or how will it be in 2022?
Thank you, Nishita. So far, our data, as of now, Bangladesh market is around total volume import last year is around 4 million ton. So beside scraps, important scraps, a lot of Bangladesh shipbreaking industries are also very big. So there, if you see the momentum in shipbreaking area, the momentum also last year increased by around 40% last year. So, so this is a very big numbers that could generate a lot of scraps to steel industries. So it depends actually. It depends on because steel capacity will not increase this year. So far, our analysis, but definitely everybody is planning to set up their new furnaces. So during this year, by 2022, during this turmoil situation, I don't feel any new capacity will come or join in the market, but definitely we are optimistic about the 2023. So another 2 million tons at least will come in the economy, and so by if not 2022 but 2023, total scrap import will increase definitely in Bangladesh.
Right, sir. And do you also see a shift in share of bulk and containers in Bangladesh? Like I think you mentioned almost it is 50% share currently.
Yes, and this year it depends on the Korea. You see that I show on my data that Korea is regularly importing scraps from Russia. So if they want to cater those demand from US West Coast or from Japan, then US West Coast has some limitations. They cannot because every month how much they could offer cargo to Asian countries. Mostly US West Coast cargo they are offering to Bangladesh, Pakistan and India are not actually bulk buyer. Vietnam is buying, Thailand is buying, and sometimes Korea is buying. So Korea is not the big competitor as of now. There is not big competitor for US West Coast supplies. But if they cannot get sufficient quantities from Japan, say they will definitely look for US West Coast bulk. So since the supply is very limited, so I feel total bulk import in Bangladesh will reduce this year due to supply constraint, nothing else, due to supply constraint.
Right, and also maybe some volumes or increasing volumes from EU may be seen in case of bulk imports for Bangladesh.
Yes, if you see the last year, 2020 import volume from Japan has increased significantly.
Yes.
But by 2021, Japan local domestic product price has gone up so quickly in comparison with other countries. So Bangladeshi buyers could not import from Japan due to their domestic demand, high demand. So for those additional demand, they tried to cater from UK or EU countries. So that's why last year we have seen a lot of growth for bulk import, especially from UK and EU. So now, if you think about the 2022, it depends on, of course, UK and EU suppliers are also interested to supply in Bangladesh, but their first preference is always Turkey. So if Turkey drives the market like now, what they are doing now, then it is also very difficult. If they are always looking for hyper demand, like last 1 or 2 weeks we have seen, then UK or EU suppliers also interested to supply in Turkey. So total supply will be reduced, I feel.
Right, sir. Thanks for your inputs on that. Now I think I have a question for Fazal, sir, that what is his outlook on scrap import volumes for Pakistan in calendar year 2022? And sir, how do you see the impact of currency depreciation, especially on scrap imports?
Yeah, we have imported like 2 million tons up till January. I don't have the figure of February right now, but 2 million tons. Theoretically, it should double very easily. It should go to 4 million ton plus. In fact, if I had to, it could go to 4.4 million ton actually. But however, given the prices, given the fear factor, we have the Pakistani market has, like other players in 2008, burned their fingers very badly by booking high cost raw material. And at that time, melting was very small in Pakistan. The people used to buy billets from other countries, and they had burned their fingers very badly. So people are a little shying away. So that will sort of create a shortage of supply of scrap and intermediary goods in Pakistan. And at the same time, few of the local small players, because it's a very fragmented and largely undocumented industry. So small players, since they're not documented, they do not have access to banking lines that easily, like other companies have, who are structured and properly managed they're working in. So with the decrease in their available capital, their purchasing power is going to go down. So that is also going to be one aspect of space being created for the documented and organized players to make inroads into those places. However, the next portion, part of your question is the currency devaluation. Yes, Pakistan is in a fix. If you grow at 5% plus GDP growth target, then you're increasing your imports. If you slow it down, then the contraction of the economy comes into play. So we all see here that the currency will definitely devalue further. Where can it go? I think we are looking at a number of 185 by the end of, or maybe 190 at the end of June, if the imports and export gap is increasing. If you see, if one has to look at the overall import figure of Pakistan in terms of as a ratio to GDP, it's not that high. It is only 16-17% of the GDP. The problem is export. Exports are only 8%. So that creates a huge gap in terms of 8% of the GDP. So this is where we have to address our issue of matching the import with export, which will take some time, and it will create pressure. So with that coming into play, the inflation is already increasing. The interest rates and the real interest rates are still, I mean, the CIBOR is less than the inflation. So there is a possibility of interest rates increasing further. That will also create impact the industries overall, and the buying behavior and the demand side as well. So it will be kind of balancing effect on the demand. Will also a little bit new projects may not come at this stage, and at the same time there are capacities that are going away. There are small mills. They will just shut down their mills and probably go to UK and then come back after some time. But players like us will continue to look at the market and buy. So what we have done as a company, that we have bought some local material as well. And we hardly buy local material. One, they're not available. Two, is that the question, there's a problem of documentation. We want proper invoices and all that. So whatever we could get, we have purchased that, but there's a very limited quantity. So we are largely dependent on imports. So the price pressure will be there, and we'll have to maneuver very carefully in these difficult times. And it's very difficult to say that the prices are going to come down or not, but it appears, if I take two factors that have made the increase in the prices, one is the pandemic, the other is Ukraine. Pandemic prices, as I said in my initial analysis, that in FY22, the standard deviation was very low, 13 to 14%, meaning people had sort of new norm, 500 plus $550, $540 was a scrap price, which the country had accepted. It was passed through, and the new costings of construction had absorbed it, and we can see that the demand was normal, and we were buying constantly. But after this Ukraine and Russia conflict, I really don't know if the prices are going to go up further or not, but I can surely say that they're not coming down very soon.
Thank you so much, sir. I think next question that I would like to ask is on the freight rates, how they have changed in last 10 days or so, especially after the Russia-Ukraine invasion. Sunjoy sir, to start with you.
There is so far we last almost 2 weeks after starting this bunker price is going up. There is very little impacts on the container fronts, I could say. All the shipping lines, they have not increased any freight increment yet, but they are giving the signal to all the suppliers that they are going to change the freight. So they don't know what will be the impact in coming days, but so far we have not seen so much of effect. Of course, there is I could say there is some little effect. I heard even $500 already increased in freight in containers per containers for Bangladesh bound containers. But for the bulk suppliers, they are very much afraid. All the bulk suppliers are expecting very high price for the bunkering price, because whatever we are booking today, it will shipment will be made in end of April or middle of April. So by this time, nobody knows what will be the oil price. So everybody is expecting that oil price will touch, might be 200 levels, $200. So based on that expectation, everybody actually expected that freight will go up. So they are very shaky to offer any cargo at this moment until and unless freight they can book the freight, because last time what happened during pandemic, after the pandemic situation, middle of 2021, when freight has gone up significantly, then a lot of traders actually lose lot of money. So that is why this time everybody is very much careful to offer any cargo. So by this time, I think freight has gone up already $20-25 per ton. So which will impact directly to the scrap procurement, the scrap purchase price.
Fine, sir. Next question in the chat box that I can see is one is for Fazal, sir. How Pakistan market will sustain these higher levels of scrap as well as for rebars?
Yeah, I think they will probably, as I said, people are wait and see game is in the offing, and we are sitting on some inventories. Pakistan right now has cheap scrap because the cycle is when you order, and the lead time is like 75 to 90 days. So we are still sitting on cheap inventory in our yards, some in high seas, and some are to be delivered. So the actual real impact, we have not increased our prices significantly. We have increased in Pakistan, the prices after this crisis were increased by around $40. Had already been increased $40, which has been absorbed. As I can see my order book, they are not affected. We are still getting the orders. Orders from all the dams are still in my books. So, and I know for sure the other players are also supplying, and there is no major dent so far. What I see is June 2022. That's the time when the most expensive scrap will come and get dropped in our yards. And by that time, the prices has to be increased by at least 20,000 PKR. So at least 20,000. I would say 25,000. So which means to cover the entire cost of the scrap increase in prices, and as Sanjay Bhai has said, the freight prices are also increasing, and that translates into scrap prices actually immediately, because we in Pakistan always buy CFR. So the prices are inclusive of freight. One element is freight, and the other element is the availability and supply and demand side of the scrap. So with that and interest rates going on, and the increasing electricity prices as well because of the increase in oil prices. So all these together, I see 25,000 rupees increase in rebar's cost, and the market is also expecting the same. As we speak to our commercial customers, and they all expect the prices to increase. That will also that is also sort of creating a demand. Everybody wants to buy right now. We are getting long contracts, which we are refusing because nobody wants to enter into any long contract. We are quoting our prices only for 15 days validity, not more than that. Normally, our prices are quoted for 30 days. So we are all trying to, find a way to swim and maneuver these extremely difficult and volatile times. Thank you.
Understand. Thanks, sir. I think we'll be taking up the last question now for Sunjoy sir, that has come in the chat boxes. Given the recent spike in scrap as well as the finished steel prices, how do you see it having an impact in the government-funded infrastructure projects, especially with respect to Bangladesh?
So this is very complicated question, because now besides scrap price, there is a lot of events are happening. Number one, scrap price has gone up, and our rebar price is historically high at this moment. So it is very difficult for the end users to accommodate this excess price of steel price. So it is very much difficult. And for the government point of view, if you see, for all the governments actually struggling to cater the excess price of fuel, because all the governments has to buy a lot of fuels with a high price, and so it will directly impact to their balance sheet, their annual budgets. And also fertilizer. Ukraine is the largest fertilizer supplier in the world. So fertilizer is also an issue to run our economy, especially for the agriculture sector. We have to import a lot of fertilizer from alternative sources. That will not be very cheap. So if you consider about food, like Europe is facing food problems, but in Bangladesh, I think in Bangladesh, India, Pakistan, they are not importing food from outside. So we are somehow okay. But if you consider oil and especially for fertilizer, in any case, government has to import. So there will be huge impact on the budget deficit this year. So what will be happen for infrastructural project? So government has to now trade off. Especially in Bangladesh, next year is the budget. Next year is the election year, 2023. So government actually, I think government will not stop any infrastructural project at this moment, because before the election, they will definitely want to complete all those infrastructural projects. Despite there will be a huge impact on their budget deficit or something like that, but they will continue their infrastructure project. This is as of now our feelings, so it will keep continuing.
Thank you so much, sir. Well, I think that was the last question that we could accommodate for this session. Due to time constraints, we have to bring this webinar to a close. Again, a big thank you to all our panelists, our viewers for joining in, And I hope that you all enjoyed this session, and surely it had been insightful to you as well for the current trends and for a short-term outlook. Also, we would like to extend our gratitude to our supporting associations, ISA and Ministry of Steel, and our sponsors for this session and the event, NMDC, JSW Steel, and Tata Steel. Do watch out our next webinar on impact of coking coal prices on global steel industry, scheduled today at 4:45 p.m. This is your host, Nishtha Mukherjee, signing out. Thank you so much.
Thank
Fazil
you.
sir,
Thank you.
yeah,
Thank
Fazil
you.
sir and
Thank you.
Sanjoy sir, small request, if if in case you could give your slight feedback on the session. Till then, we'll close the webinar, of course. But yes, I mean, you could share your feedback till then. Yeah.
Sanjay bhai, after you.
So this is, I think, this is a great opportunity to organize such an event, critical time. Fazal bhai also there. I could learn a lot of things from him also regarding Pakistan scrap markets. And nowadays, actually, it is. I think everybody is very much concerned about the current what is going on. Nobody knows. Even after one hour, what will happen? We don't know. Even we are sometimes taking decision to buy. Sometimes after 1 hour, we are postponed the decision. So everybody is very much indecisive manner. But we, being a leading company like BSRM, we have to keep continue. We have to supply our steel materials to Bangladesh. We have to keep our commitment for our clients. So I think it will remain like this for next 6 months, and we have to cope up with the different scenario like COVID. So this is a new normal. Again, this is a new normal. Even war is close, we have to remain with this.
Thank you, sir.
But of course, this is a good timing for, I think, I want to give special thanks to Steel Mint. This is a good timing to arrange such a great event. I was actually, I participated all the sessions. This is a great to know all these things, because different people are giving different thoughts. So it will enrich me as well. Thank you.
Thank you so much, sir.
Thank you. Yes, similar feelings here. I learned a lot as well. And thank you, Nishtha ji, for inviting me. Although, honestly speaking, neither I purchase scrap nor I look at supply chain. But I had to prepare for this. So I, being a CFO, could go back to my numbers and extract some information. And yes, it's always a learning. I have attended your conference in Bangkok back in 2018. It was a great learning there as well. For me, it was first time. So huge gathering, a wonderful occasion. I mean, I feel the wow, because there was so many big players there, and there was so much to learn. So I congratulate you, and I hope to attend more. But right now we are sort of firefighting. I am CFO as well. So yeah, and thank you so much. Thank you so much.
Thank you so much, sir. Thank you so much, everyone.